A very good morning, everyone. Thanks for joining us today. We're going to take a look, of course, at the market and price action. But first of all, as you know, the drill probably by now, this PowerPoint quickly explaining some things like this disclaimer. The disclaimer says that the online material here is developed for a global audience. Please take into consideration that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Good. With that said, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered very high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with this disclaimer and the content mentioned here, and we thank you for your attention. Good. Thank you, folks. Good morning, everyone. Good morning, Vigantas. Good to see you all here. And we're going to take a look at moving averages. As you might know, specifically a very useful tool for many things, in fact, like support and resistance, like identifying a trend, using them for filters, even using them as a trigger or even entries. So they're quite multifunctional in all these 5 steps, which is basically a checklist prior to entry. Make sure to take a look at Admiral's Markets in social media, and with that said, let's take a look at the calendar as we always do. Retail sales was relatively upbeat apparently because the Aussie, certainly against the dollar, went up a lot, or at least some bit, and the interest rate stayed at 2.5. And we had a statement from the Aussie. Otherwise, today is relatively quiet. We do have some Euro news, about 2 hours CPI red tacked, otherwise some more yellow and green. However, that is going to change a bit tomorrow, Thursday, and Friday, specifically Friday NFP. Thursday, I think both Euro and Pound interest rate, and tomorrow, if I remember correctly, ADP, among other things. So it's going to be a bit more action-packed throughout the week, in fact. So let's see if that increases volatility. I've read an article today, by the way, for your information, that showed that basically the market volatility or volumes was down this 2014 compared to 2013 by 45%. And so maybe if your trading has had recent choppiness, or the entire 2014 is maybe not showing the same results as 2013, that could maybe be a reason. The lower volatility or the lower volumes, not to say that the volatility is maybe not moving up and down. Obviously, you have a lot of ups and downs here, but maybe the sustainable moves in one direction could be a lack of volume, or could be explained by a lack of volume, for instance. I don't know. Just the fact is that there is lower volume. That's a fact, and how that influences us is more of a interpretation, of course. Well, anyhow, let's go to our charts, the Euro-dollar, and we'll use these moving averages. I also have other things besides moving averages on this chart for your information. This is pivot points and Camarilla and the 2 oscillators and some candlestick patterns and a mix of that, just to recognize candlesticks, moving averages, and support and resistance, basically. Why? Well, one of the reasons is I want to know what the momentum is. If there is momentum, I want to know where resistances are or support is, where the ceilings and floors. And point 3 is I want to know for divergence, if there's divergence or convergence, obviously. And yeah, the candlesticks basically will be providing info with regard to what kind of reaction you have at those key levels. Okay, so that's basically the goal. So the Euro-dollar, let's take a look at, one second, at our moving averages. We have flat, more or less, I would say, but still more pointed at the downside. You can see there's a bit of a gap between the 21 and 34, the 13 and 34 to be precise, in fact, EMAs, and that all near a daily pivot point, still above price. So it looks a bit more bearishly set up with those shooting stars as well at the moment. However, considering the fact that the 4-hour chart has divergence between these bottoms, I would still be a bit cautious of that. We do have 4-hour definitely in a downtrend, obviously, but we do have pretty strong multiple divergences between these bottoms. That would be a reason for me to be cautious and wait a bit longer with this euro-dollar for direction. Price could be fighting with this daily pivot point and see a fall from there, but as I said, I would rather wait for a bit more confirmation, wait for price to actually move down and wait for a hook back and then fall. That candlestick would not be worth enough for me to say, okay, considering the 4-hour divergence, to say, okay, that's worth a short right here, right now. Specifically also, if you look at the fact that we are very early in the day. I mean, of course, the market has been open since Tokyo, but we know that Tokyo, especially with this euro-dollar, doesn't do much of a movement. As you can see, look at this, price is just going sideways. So really, for a euro-dollar or for a currency pair like the pound-dollar, the market just opened. And the market makes these volatility spikes up and down during this phase. So I'm always a bit more cautious, in my opinion, this particular hour when European open and when London opens the next hour with trading. I rather plan my trades in these hours most of the time than take a trade. But this is something actually that we'll be discussing tonight. By the way, tonight we have a webinar. This is exactly a topic that we will be looking into, by the way. So a small promotion here where I still have your attention for tonight's Pro Learning Lab. It's not Thursday, but tonight. Price volatility at 6 p.m. Central European time. So yeah, so if we do get a down move and hook back, there could be good follow through. Upside, I don't think it's too interesting at the moment. Why? We got a weekly pivot point. We have a daily R1 here. We have an H4 pretty close by. Plus we have a trend line coming in like this that is connecting the 4-hour tops like that. So to me, that's too close to resistance. This trade to the upside, I think, is not worth the risk. It's too narrow. The space is not wide enough. I do see space to the downside, but I want confirmation the price is moving down. And if price does move up, I'm not interested because there's not a lot of space. I mean, if price were to box its way through it here and then tomorrow start to make pushes up again, that's a different story. Then we could have a breakout to the upside. That's fine. But for today, I think it's not worth the risk, in my opinion. Let's take a look if there's something else going on that might be a bit more interesting. Pound dollar has totally flat moving averages, so on the hourly. So that, to me, personally, means I'm not interested already. Right there, 0.1, moving averages are flat. We can move on to the next pair if it were up to me. We can take a bit longer look at it, just a quick look to give a bit more information, just in case you are interested in the pound dollar. But to me personally, I would already skip this one immediately because hourlies are flat. We have 4-hour in a downtrend still. Daily, we're boxing our ways a bit up with bullish candles, in fact, but we did have a bearish weekly candle, although you can't see it that well actually because of the pivots. 1 second. Let me see if I can change that quickly. I usually use a different, a different template for looking at weekly charts. That's why I didn't change it. You see, weekly chart is still bearish, but it has a bit of a wick here. So it could be a bounce. It could be still bearish regarding that weekly chart. It looks a bit more bearish, but especially when you have the monthly weekly still above you as well. I know this is just some discretionary things that I'm remarking, so maybe to help you. But personally, I would not be interested because of this flatness here. It's not showing any momentum. I want to see momentum in the market before trading it. We're still within the H3 and L3 as well. We have a daily H4 here, pivot point here. It's very tight. If we look at the ATR, we do have a pretty high projections though, so it seems to be something going on here regarding the ATR that I'm not aware of regarding the potential movement in a day. But unless you have specific questions, I suggest to move on to the odd USD maybe and take a look at other pairs. By all means, you can always ask a question, of course, or send your screenshots, and we can gladly take a look at that. Odd USD. When looking at the moving averages, we see that price is not aligned. Another way, of course, to look at moving averages is not necessarily to wait for price to be aligned, but you can also trade it back to the moving averages. Of course, this is more of a reversal trade, but you can use them like that too. So if we now in the case of the pound dollar, on the hourly at least, that wouldn't be in play because price is at the moving averages, right? Moving averages are flat and price is at it. But with the case of the Aussie, for instance, if you see a shooting star here, price is really relatively quite a distance away from a gapping moving average like this. You might expect a trade back to the moving averages, for instance, like this. That's something, it's a bit more riskier, but it's, if you choose the right spots of good levels, good support and resistance levels, it's one way of doing it. Obviously, the moving averages are not aligned here, so that particular idea would not be in play. But maybe a reversal back to those moving averages and further could make sense. So from that perspective, we do have a weekly pivot point pretty close by. And from that perspective, we broke through the weekly pivot point and are hooking back to it. If there is some kind of hourly price action signal at that weekly pivot point, I think this is the most interesting of the three we've seen so far, personally. And any shooting star, Harami, hanging man, rejection, pin bar, any rejection basically there could merit, in my opinion at least, a short. So this is of course different. This is not really using moving averages in the classical sense of support and resistance, but more in the sense that price is away from them and can move back to them. But we, from a bigger perspective, know that the rejection at the weekly pivot point could lead to more. Now, why is that weekly pivot point interesting? Because we also have a monthly, not too far away, but that's maybe not too relevant. Why is it more interesting? Because if you look at the 4-hour chart, let's see, we had first of all, a pretty strong fall. More importantly, maybe I would say is the weekly again. Let me just save this, sorry. Let me just save this template here quickly. Alrighty. This weekly chart, you can see, had a very bearish candle 2 weeks ago, and last week could have been a retracement of that week for more downside. Now, we're not 100% sure of that. Obviously, nothing is guaranteed. We still have a horizontal level right in here. That could be very important. That hasn't been broken as yet. So in that regard, there's no guarantee that price will push through this support level and fall to lower lows. All right, this could still be a bullish candle, and we retrace that bullish candle, right? But considering the fact that price is making lower lows and lower highs on this daily, or at least lower highs, it looks like a descending wedge, doesn't it? In fact, there's a decent chance that price, when it moves up, to hook back to this line, for instance, or the monthly, weekly, that it could fall again. Now, we don't know that, so that's why it's good to wait for a candlestick pattern at the weekly, because it might as well, you never know, it could shoot through the weekly, shoot through the AR and daily resistance 1 and hit the monthly pivot and make the rejection there. Right? So in that regard, you want to wait for that confirmation, because otherwise it doesn't have to stop here, it could stop here or here. But anywhere in this zone, that's my point basically, is if we get a good candlestick pattern, it's might be something decent to keep an eye on because it could be worth the risk here. That's my point. So let's see if there's something else going on besides this. Daily candle, by the way, very bearish yesterday after a harami here 2 days ago. So this upside today could be retracement of yesterday's downside. Another reason, another confluence, in fact, for that analysis. So the Aussie to me looks interesting. So we can take a look at the top of the hour, and otherwise, we have to do it separately, but this is my idea, at least for today. So let's move on, take a look at some other currency pairs, see if there's something else interesting besides the Aussie. Let's take a look at the Kiwi. Before we dive into the Kiwi, Zoran has a question, which is always good to clarify things, so I highly encourage any questions, comments, screenshots, definitely. And asking whether a top-down approach is enough, or if if it's enough to look at an hourly 15. If you have very strict, if you have a very strict trading plan that is only looking at hourly and 15, there's nothing wrong with that. I would say personally, of using two time frames or 3 time frames, nothing wrong. Personally, for my own trading, I always look at all time frames, except of course monthly. Weekly I look at most of the time at the beginning of the new week, daily at the beginning of the new day, and the others I look at, except the 1 minute, I look at frequently, and the 5 minutes. 5 minutes, if I use it, it's more for entries and triggers, right? But anything from 15 to 4 hour I look at regularly, the daily every day, the weekly every week. So I do that personally. For this particular strategies that I'm using, not necessarily, you don't have to, and I only typically will show you here in the webinar elements that I think are interesting to mention. So that's why I would not necessarily go by time frame to time frame. Otherwise, it probably will take too long to go through everything, I think. But for this particular, if you use moving averages like this for momentum, an hourly perspective is good, and 15 is the confirmation in a way. And all other things I look at here is more for like confluence element. All right, so I don't think there's anything wrong with looking at multiple time frames. I certainly do. But if you have a strategy that is geared towards a specific form, like trading plan and trading rules, and there's nothing wrong with only looking at 2 or 3. So that would be the answer. Let's see. Kiwi, let's take a look at the Kiwi. Eve has a question on that. So yeah, it's making a bit of a bullish bounce at the moment. Here too, like the Aussie, the moving averages are not aligned to either side. Why? Because they are bullishly pointed up but not aligned. The 34 is above 13, which means that there's still that the 13 needs to cross over the 34 to have that momentum, right? Like here, 13 was under the 34 for downside momentum. Even here, 13 was above 34 for this upside momentum. It didn't go far, but you did have that short follow through. Obviously, these momentums were further, right? But that you never know how far momentum will carry price. Here also, momentum was to the downside, but didn't go all too far. We don't know how far it can go. So we don't have that right here, right now, right? It's not aligned. That's my point. So here too, not too interested unless price will get to the H5 or weekly pivot point confluence, or maybe even the H4D1, but a bit higher seems to be a bit more stronger confluence there. 4 hours definitely set in a downtrend looking at these moving averages. Daily too. weekly too, indeed. It's a weekly chart. If you look at the weekly and the momentum, what are the characteristics of momentum to the downside? Lower lows and lower highs. And if you look at these weekly candles themselves, we have that at the moment. So a key level would be 85.80. Wouldn't expect a break necessarily through that. Otherwise, the dynamic of prices is changing a bit. You can see with this upside too, we had a breach of the low here once. Otherwise, it was upside until we had a small retracement here. Right, so that was momentum. The same would be valid if we break through 85.80. So I wouldn't expect that necessarily at the moment, which is actually that 85.80 is the same as this monthly pivot. And so we have good resistance levels here, the weekly top, daily, the weekly high, daily top, and monthly pivot, and we have good resistance here with the weekly pivot and some tops on the lower time frame, on the 4-hour. So prices looks like it's retracing. It's actually retracing back to the moving averages. So we have some counter trend movements going on, I would say. So in that regard, looking for candlestick patterns at this level, for instance, would be interesting to me. Would it be interesting to trade it up to that level? Not, well, I mean, it could be. I mean, looking at the 50-minute chart, it's already bullishly set up. So it depends how aggressive you want to be. There is that potential. For instance, if it hooks back to the daily pivot point, to bounce up to that weekly and then find resistance. Am I interested in this upside? Not so much, because of the hourly is not aligned. I like to have the hourly aligned with the 15. The 15 is already up, the hourly not. This is therefore not something that is in my preference. I would rather wait personally for a candlestick pattern at here than to trade it on the 15 to the upside to that weekly point if the hourly is not aligned. So I hope that makes sense. So yeah, in that regard, I indeed agree with Eve at the moment. I'm not sure, of course, your specific trade parameters, but in general, I would personally, I'm not sure if that's good for you or not, of course, but I would personally, because I'm neutral at the moment, I would like to see it here for me to trade it to more downside. But let's see, maybe it doesn't get there, maybe it'll stop here, for instance. So it's good to keep an eye on this confluence here, and in the extreme case, all the way here. But I would say that at least for today, this doesn't seem likely here, and more likely would be this or this, right? Look, considering what you would expect from average daily range today. So this and this seem more likely. Downside, what would downside mean? 80, there seems to be target-wise, we could expect maybe, I wouldn't expect more than 83.70, looking at the fact that there's a bunch of pivot points here, monthly S1, weekly S2, daily S3. That would probably be the very, very max for today at least. Hi, Daniel. Yes, it is. I can send it to you. Best is to send an email to me, so I won't forget. And there it is. Okay. Hopefully you have it there on the right side. Good. Alrighty. So let's move on. And welcome, by the way. Glad that you joined us as well. Let's see. This is the dollar CAD. Now I know, by the way, for Dino, I know maybe this, maybe it seems like a lot of lines to you. To be honest, you really don't need all of them. Like the ATR is something that it's anyhow very similar to the Camarilla indicator. So for those that want to have a bit more maybe clarity, you could only have the pivot points, for instance. That would be just as valuable in a way. So that depends, of course, on how you want to, how you want to organize your charts yourself. Let's see. This is the dollar CAD. We do have definitely good upside momentum. 13, a lot of space between 34. We're making, on top of that, from our chart pattern, recognition skills, we can see that this is a sideways range going on here as well. Let's see, where do we have the pivots? Pivots, monthly and daily pivot, very interesting, right about 108.85 here, same level, and an L3 long. Interesting. Well, 4 hours showing a crossover, by the way, just for informational purposes. Plus, from just using classical trend lines, we can see the break. Right here, right? Break of the trend line. So that is showing a discretionary breakout, in fact, of the dollar CAD to the upside. Now that comes a bit as a surprise because we had a lot of momentum to the downside here, followed by here. In fact, hook back and follow through, but we didn't get the follow through. That happens sometimes, unexpectedly. Although we did have a bottom here. Take a look at the daily quickly. Daily big, wow, big candle. For the dollar CAD, it's a big candle, let me say it this way. Pushing through the monthly pivot, closing above the monthly pivot. Let's see. So yeah, that's about it, I guess. So yeah, from this point of view, we have the moving averages aligned. So let's take a look at the 15. What I would like to see here, because the hourly is aligned, so this is good. So when this is aligned, from a momentum perspective, I like to then zoom into the 15. And if we look at the 15, we can see the fact that they are flat. So that's lacking. We still need to see 15 kind of show an impulse and then make kind of a correction that we can then zoom into the 5 for potential entry there, right? What I basically want to see is 15 and 1 hour have a momentum to it. This is not momentum as yet, although let me say this way, price is close or the structure is close to getting it because all price needs to do is pop up a bit here and it will drag the moving averages to give it a slope. But we don't have that yet, so we need to wait for that as a confirmation. If it does do that, then we have 15 and hourly aligned and good to go. So hourly is good, now waiting for the 15. The other scenario is, how about if price doesn't make this pop up? Then the other way, what we could expect is that price makes a dip down. That wouldn't be too bad either because we already see a ton of confluence here at about 107, 108.80, right? 108.87. If price shows an hourly candlestick pattern at this level, engulfing, for instance, then that could be an interesting level, in my opinion, to attempt to long. That's something I would also be looking for, just like the odd USD down, dollar CAD up from here, from this zone, after confirmation of candlestick patterns, would also be eye-pleasing. Or if we don't get the downside, the other scenario would be if we pop up and then hook back and then start to move up again. So dollar CAD seemingly interesting. I'm not sure if I missed any angles here, but I think that I'm not a big fan of it, but today doesn't look too bad. Let's see, Rich, I'm not sure which website actually you mean. Aldi pair ATR. No. Maybe, can you specify a bit more, maybe? Doesn't ring a bell, unfortunately. Oh, was that a recent webinar we had about currency correlations, maybe? Or I'm trying to think hard, but nothing pops up. My memory is not what it used to be. The pivot point indicator is, let me check. ZM FX all pivot points. Already. Maybe it was a webinar from Nenet. That could be. Nenet had a webinar at ATR. Dollar yen. Well, it has everything aligned. 34 is pointed up, 13 is a bit flat, but they are aligned. Yeah, I think we're looking at a situation where the dollar yen, considering the fact that the pivots are below it, so its resistance is out of way. I think we got a situation that price can get to this 103 level. We have a lot of pivot points. Not only that, but from a bigger perspective, I know by heart that 103 is this resistance level here. It's a daily top right there. Plus, on top of that, we have a pretty good confluence of pivots. If we were to use a fib, for instance, we see a minus 618 target there too after a 50% bounce. And we stopped at the minus 272 target. So I think that we have a pretty decent chance of getting to that next target. Now, how far will we pull back before we go there is the question. It could be shallow. It could also be deeper back to these weekly and monthly to use for as a level, right? That's something. I think the target is pretty clear. It's just the bouncing spot might be something we have to investigate. Not a lot of space, but still some space up to that bigger 103 resistance. And there we have to be careful for some downside, I would say. But that's how I look at it. So from this perspective, this Harami, one might wonder, is worth trading as is. True, it's possible. It's not bad. Personally, I have some doubts because it's not right at, I mean, it's not, it's still, visually looking at this, it's still a pretty decent gap here. If it would be a bit closer, maybe I would count it. It's a bit too far from the daily, in my opinion. So, yeah, that particular candlestick pattern is early. Let's take a look at the 15. The 15 doesn't have the moving averages aligned to the upside. The hourly is definitely bullishly aligned, but the moving averages now on the 15 are bearishly aligned at the moment. What we want to see is this as well on the 15, so that any of these breakouts, basically, right, they have, they have a decent chance of getting followed through, as we can see. Well, maybe not this one, but well, maybe even this one here, right, on the 5-minute chart, like that. Candlestick CPI version 1.6. CPI version 1.6 is the name of that particular indicator. Let's see. So that we don't have here. So if that would be aligned, or if price would maybe retrace just a bit deeper to 102.17 here, one of those two is, just like the dollar CAD, I think would be the things to look for. At least that's what I'm looking for. Euro yen. By the way, as you can see, let's see, Zoran was asking about it. Basically, with this particular strategy, you can start off with the hourly. You don't have to. You could do a top-down approach, definitely, but you can start off with the hourly and say, okay, am I interested, first of all, at all in this pair? Because if the moving averages are flat, for instance, I don't even have to look necessarily at the daily, for instance. If there is an interesting setup, then one could, like do more investigation on higher time frames. That's another way of doing that. So yeah, that's maybe another reason why, that's another approach, let me say it this way, of looking at time frames. So yeah, no problem, Caitlin. So let's see. Euro yen does have a monthly, about one monthly pivot, about, what is it? 139.72. H3, it's 37. Looks a bit tight, this bit. It also has it's not well aligned for upside, so I think Euro yen upside we can skip for the moment. At least this breakout potential here, I would not be interested. 15 is not aligned at the moment either, so no, not at the moment. Pound yen. I would be careful and wait for the pound dollar a bit to give direction. In general, the pound yen is moving up, but we don't know how the pound side of things will shape out. I don't know. Let's see. The moving averages are aligned, so we can take a look at the 15 though. And we see that here they're not aligned. So same story though. Pound yen, like the dollar yen, we need 15 to be aligned, or if price were to make one more dip a bit lower to 171.10, we do have these pivots. Now, actually price came pretty close to the monthly pivot. Didn't touch it though. So I would still wait if price can get a bit lower. That would be the best bouncing spot, because we have two, daily and monthly. So that would be an option, or wait for price to indeed start moving up and wait for momentum to come in. It's like the dollar yen, dollar CAD in a way. Let's see. Let's take a look at Euro odd. Pound and yen, let's see, head and shoulders. I'm not seeing it at the moment. Which time frame are you looking at? There was one at the bottom here, maybe, if that's what you mean. Inverted one, right? Or maybe here, at the very top here. Current one. I wouldn't necessarily say so. This was a pretty sharp increase, and this is more looking like a bull flag to me. If the left shoulder here is taken into consideration, then the right shoulder is already quite far from, relatively, from the head. So it wouldn't be that much of a balance as yet. So If it would have happened quicker, maybe. So no, in that regard, I wouldn't think of it. Let me say it this way. Let's see. Euro odd is getting some support. I think trying to wrap my head around this one at the moment. Actually, if you look at it from this perspective, there are a lot of pivot points pretty close by and prices within them. 4-hour moving averages are flat. Hourly are not aligned. Maybe not a very good one. Like at the moment, the odd USD, dollar CAD, dollar yen, let's say pound yen, seem to be on the more interesting side at the moment. The euro odd, because of the fact that prices within those pivot points, moving averages are not aligned, doesn't seem to be that appealing because of those factors. We are pushing through the pivot, weekly pivot, but in fact, it depends how you look at it. Will we push through? Is this a push through or still struggling? And can we bounce off that weekly pivot? Yeah, I don't know, it doesn't seem to be aligned that great. So I would rather look for something else maybe. Um, well, at the moment, if I had to choose, 15 is more bearish looking at these moving averages. So in that regard, I would probably, have a slight preference for this downside. But the question is, let's see, we have ATR not quite tight actually for the euro odd, and we're relatively at the bottom. So from that perspective, there's from an ATR perspective, doesn't look too great. Moving averages are okay, but we just reached a level that how much downside could we still expect? Now, from a Camarilla point of view, if we do push through this bottom, we do have a bit more. So we can see a hook back maybe to the daily pivot. Let's see, 146.94. Yeah, 94 could create a bit more space for that follow through, but that would probably be, yeah, if I had to choose 146.94 for some resistance, might be the thing to look out for. Waiting for confirmation could be very useful as always, especially here though. Let's take a look at pound odd. That seems to be the same, even worse, because all those pivots are at the same spot. That's awkward. Prices also, not only that, but prices kind of in between them, right in the middle. Bit funny setup. So yeah, I wouldn't be interested in this. The moving averages are not aligned either. So no. Dollar Swissy, let's take a look. Let's see, dollar Swissy. monthly and weekly and daily below it. Hourly definitely bullishly aligned moving averages. 15 not yet, so it's the same story. 15 is still asleep, and the hourly is good, is awake. This is something you often see at the first hour or two, first hour of the European and first hour of London session, as the market tries to wake up a bit, in fact, from the Asian consolidation. But the hourly is definitely set up for upside at the moment. The question is when and where. Well, we had already a bounce off the daily, so it could be good momentum to the upside, just like the dollar yen and dollar CAD in a way. Let's see how the bigger time frames look like. 4 hour, set an uptrend channel. The channel is a strange angle, or a weak angle. Daily had engulfing daily twins to the upside yesterday. Last week was a doji, but we have already pushed through last week's high. So two scenarios: either the dollar corrects deeper, in that case the weekly pivot could be the bouncing spot, or the dollar strength continues and we would, can use the moving averages on the 1 hour 15 to catch momentum trades to the upside. $90 though is a very psychological number indeed. Eve, I agree with you, and that's something that therefore might be an aspect that's not recommending the dollar Swissy. I mean, with 90 close by, I agree with you. It could be better to look at dollar yen or dollar CAD because of that. Although it looks bullishly aligned, it's worth filtering it out because of that level. I can see your point. It's a good reason to do that, and I agree. 90 is very close indeed. On NACE, basically, the best is to look at more pairs, like we're doing now. Look at more currency pairs. That increases the net opportunities, right? The net of how many opportunities you can catch, or or look for other strategies that could capitalize, for instance, on bounces, like candlestick patterns at pivot points, for instance. That also increases the number of opportunities. So you would be trying to, find a rhythm that matches what you're looking for. If you are indeed only looking for a trend and you're only trading, for instance, $0 pound dollar, you could be waiting a decent amount of time before that happens. So that could be too exhaustive, too long. I think it's better to focus on one thing, personally. I think one market, I think, gives an advantage because you are then focusing on something and getting better and better at that particular style. Doesn't mean you cannot trade 30 pairs or the 20 pairs. The pairs that, the pairs that have a decent volume, not something very exotic, right? Like Euro odd is a cross, but it's a good cross. It moves a lot, right? It probably even moves up more than a lot of majors, right? So, so that's what I would do personally. But doesn't mean that you have to stick to only trending setups on one pair. Trading trending setups on 20 pairs and then trading bounces off another 8 pairs, for instance, and then you have using Camarilla maybe for some additional trades intraday, and before you know it, you already have plenty of opportunities in the trading day. Yeah, I have Twitter. It's not something, though, I really actively use for setups, but I'll try to keep it more in mind. Let's see. So most of the time, the main stuff would be discussed here. So if you have any questions regarding setup that I see, the best is to ask it here, or you can send a tweet to my Twitter, and that's something I would see. So if you have any questions, you can always do that. I'm not sure what. Let me take a look here. It's at Chris. Just my name actually. Right? That would be the fastest way to ask anything. Let's see. What else do we have left? In fact, the Euro CAD and Pound CAD. CAD is moving, and we do see Euro CAD and Pound CAD too, but we know that the euro is not at an easy spot against the dollar. Pound might be a bit different, but the Pound CAD has a monthly pivot point right above it, so that would definitely filter out something for me, because the moving averages are bullishly aligned on the hourly, but the monthly pivot point is so close, so that's an easy no. So we can move on to maybe this Euro New Zealand and Pound New Zealand. We know that Euro is struggling, so the Euro New Zealand doesn't look that interesting at the moment. Pound New Zealand neither, because it's just, well, basically moving average is not aligned, and there's no clear candlestick pattern developing at a major support level as yet, as far as I see. Right? I'm not necessarily looking for any candlestick pattern, because you got a lot of them here, right? They don't really go anywhere. So that's why I'm looking for ones that have a substantial potential impact. That, first of all, a candlestick pattern that is a decent amount away from the moving averages, but also at a decent support or resistance level. What else can we look at? Yen here we have. So this is not that bad, actually. Funny enough, although the odd USD is showing some kind of rejection at the weekly, although we don't have a confirmed candle close as yet at that level. But it is, let's see, let me say it this way, it is getting there. Yen is a bit different because of the yen primarily. It is pushing up. We're at the H4 breakout. Let's take a look at the 15. Could be interesting, but what I would like to see is a consolidation and then a push through. Consolidation that, yeah, more or less, let's see, maybe the 5 minute. At minimum, the 5 minute needs to go back to the zero line here. I would not take a break of this high, personally. No, not with the Aussie so close necessarily to that. But if it does pull back to these daily or monthly and has an hourly rejection, that could make sense. Or if price were to make a bigger consolidation here on the 5 minute chart, like that, and the 15 is still bullishly aligned, and then the 5 breaks out of that triangle to the upside, that would be another way, personally. So will take some time, unfortunately. So that's about it, I guess, what I have in mind. So that's primarily looking at the AUD/USD, dollar yen, dollar CAD, pound yen, AUD yen, I think. Let's take a quick look at the euro dollar. Still going sideways. Pound dollar had a bit of an upbeat hour, but not enough, I think, probably to, well, yeah, you can see moving averages are already getting a bit aligned here. But the hourly isn't, in my opinion. The hourly is still, I don't know, this is not enough. We needed more of an angle, so that's the thing. So the pound, not yet. Let's see, AUD/USD, 693.30. Before it gets there, it has really a lot of resistance to push through. You know, we never know if price can go and break certain levels. So the answer is always difficult to say. But considering the fact that there's so much resistance as a weekly and a monthly, I would think that's not an easy thing to do. And although it could happen, it would take quite a decent energy to get there. So it's not something I would be necessarily thinking of right now. Okay, looking at the 4-hour and daily, there's really not much momentum to either side. And the hourly is a mix too, so there's quite a lot of mixture here going on. But from this perspective, from the hourly, we are closer to resistance than support. So a bounce here seems decent probability, but we never know. We can always break through it. Let's take a look at gold, maybe. Indeed, I don't have it here on this particular template. Let's see, XAU. Four-hour, definitely a lot of down momentum. Hourly does have divergence, but still has some momentum left, but it's slowing down here. 15 is actually showing the opposite. It's actually bullishly aligned moving averages, but stuck between H3 and daily pivot at the moment. Yeah, I can see your thinking, Bjorn. Bjorn is looking at this trend line roughly, most likely, as a resistance spot, and I can see that reasoning. Thirty-minute charts. Yeah, I can see why that makes why you'd be interested in that. We still have a pretty decent potential up to DDR2, for instance, ITR daily high, H5 here. What could happen though is if we do break is kind of a punch through, a hook back, and then go. Waiting for that hook back might be a better play than taking the initial break because of the fact that price is in a pretty strong downside. There's most likely a pretty decent chance we'll do this before getting up there. Waiting for that dip back before taking it up, I think, is less riskier than taking it here because there's also a bit more space when you wait for the dip. Would make more sense, I think, to me. the problem is you never know how aggressive the upside could be. But that's always a bit of a risk if you wait for the pullback. But what can you do? I think considering the pretty big down momentum, that is a decent chance. That's all I can really say about it. But if we do break the green line, in general, if we let go of the exact break, how the break does handle itself, there seems to be some space to retrace a bit of that downside. Weekly though daily does have lower lows and lower highs still. But the weekly candle hasn't been retraced. I know that it's a bit of a mixed picture, but the weekly bearish, but hasn't been retraced. Daily showing lower lows, lower highs, but this is slowing down as well a bit. And we can see it's kind of like bending a bit like that. So it could bend maybe a bit further like that. And then we can get that maybe a bit of upside to retrace the weekly candle where we might see resistance kick in again. That would seem the path of least resistance at the moment. Let's see, the slowness of the market, that's difficult. I wonder why as well, actually. Maybe all these quantitative easings, and the market is a bit undecided maybe which direction the longer term we can expect. I don't know, maybe if we look at US data was showing some recovery, but then signs of potential slowdown again. The Eurozone is talking about pumping in more quantitative easing, but it's not really backing it up with a lot of action. The yen totally lost its volatility, just boom, went into silent mode, right, after a lot of uptrend. Probably also a big factor. So it's an interesting one. Difficult to pinpoint exactly, I would say, but maybe these bigger insecurities about future economic directions could maybe put a lot of brake on the volume, maybe. Difficult. Dollar Swiss C I would skip because of the bigger 90 level. So let's see if things pick up. Maybe we will know more after NFP again this week. I do think that, usually speaking, these months are actually trending months. So it's a bit funny how that isn't true this year. So we'll have to see how the summer handles itself. Maybe after the summer things pick up again. You never know. Maybe because we had a slow spring, the summer will be faster. I think personally it will all depend on how fast the U.S. recovery picks up and how fast the Eurozone might want to do something about its situation. So if those two things really start to kick in, I don't know, who knows, maybe the summer will be a bit more more pacey, has more pace than a usual summer. Let's see. The dollar CAD. Let's see. I would be interested to see if we can see some bounce off this level here at 108.80. Pretty close. We're getting the downside retracement here despite the uptrend indeed. Is there any CAD news coming up? No, nothing, only USD. And it's all light and medium. We did take a look at pound CAD, and it was not interesting because of the monthly pivot right above it. And then for me, that's too close with the too much resistance basically because of that. Oh yeah, I mean, there could be in that regard. You know, if you look at it from a different, I was looking at it from a perspective of a breakout to that level, but it could be. Didn't think about it at the time, but if price were to generate any, excuse me, any interesting bearish signals, maybe worth taking a look at. So that's, of course, could be interesting. But it depends on the dollar CAD. The dollar CAD starts to really move up a lot. I would also be careful. You know, you never know, price could punch through the monthly here as well. So, sorry, I'm losing my voice, but not upside at the moment, unless we really push through that monthly at the moment, and then get some retracement, and then push up maybe again. That would be a filter for me to the upside. The one advantage regarding the volatility, though, is that trading actually with these particular tools and indicators, in my humble opinion, when you use, for instance, the Camarilla and moving averages, still gives maybe, although the overall volume is down, still gives decent opportunities, I would say, to find trades on the lower time frames at least. I think that the lack of volume specifically more affects trending modes on like a 4-hour chart. At least that's my how I view it. That's how I perceive it. The 4-hour chart doesn't seem that much to be much follow through on trends. Although even maybe the pound CAD isn't trending overall, you can see prices moving sideways. It doesn't mean, as we can see, that price is not having some movement within a direction, within this directionless sideways move, right? But that's just one way of looking at it, I guess. It all depends, but that's how I would see it. The MA indicator, which, let's see, oh, those are 34, 21, no wait, 13, and 34 EMA on 1 hour, and I use 21 and 34 EMA on 15. Oh, the indicator itself. That is yeah, that's a customary one. Let's see. I'll just drop the email address. Yeah, it's very handy indeed. I think so too. I'm a big fan of it personally. And it's just a lot easier visually to look at them instead of the moving averages that have one color. Yeah, I wouldn't want to go back to them. I like it so much that it's easier visually to get a read on what's happening. Absolutely. Yeah, looking at this particular chart, you can see indeed how useful it is. It's visually quite easy indeed. Although this is maybe a good example, I'm not saying, but yeah, 15 is a bit slower. You could still use, I'm sure 13 and 34, well, I'm not sure, but I would assume that they have the same, would have a decent reading as well. But I like the slower, the faster ones on the 1 hour bit. That's why. But I guess if we make this 13, it wouldn't do much to it. The only thing is that it changes a bit more often from blue to red, and I like it that it's a bit more slower, personally. This is gold. Let's see, XAG. Let's take a look. It's actually looking more bullish. I mean, it's already having a crossover here. But yeah, it's definitely 4 hours surely in a heavy downside. I'm not want to underestimate that, but it is contrary to the gold trying to push through this resistance line. Now it does have the weekly and monthly pivot right above it, so that does not look a good breakout to the upside. In fact, this could maybe turn out to be some kind of a half false breakout if it bumps into these resistances and whoop, maybe make some downside. So in that regard, it's not as clear. We are back to support, back at the, wow, amazing, back at 1860, and we're seeing some bounce to it, but obviously resistance is pretty close. So we have support very close by, we have resistance pretty close by. That's why I would be waiting for the moment until price shows some resistance here, or otherwise shows a bounce potential here. But otherwise, it looks quite tight. Anais is asking about if Dow corrects, if gold can seem so upside. Yeah, we have to see what kind of correlations we will get. Who knows? This is, in a way, I would say, a bit new territory for, I'm not an economist, but it looks like a situation that is a specific configuration that it hasn't occurred that often. I mean, I don't want to say that we never had recessions before in the world, but this particular one is turning into a very flat recovery. Something I know economists are referring to what has happened in Japan in the past. So, well, I guess we'll have to see what kind of correlations play out. And whether gold indeed gets a boost. You would think that if the economy, it depends on how much the U.S. recovers. If they start to increase interest rates, that could be a go-to as well. But this is I'm more focused on technicals, if you I can see your point definitely, Anais. Let's see how that plays out. Gold, in that case, would have to, in my opinion, show some willingness to push through, for instance, these pivot points. If it does that and breaks probably even back above this resistance, then it would make it more interesting for the upside. Yeah, another way of looking at it is indeed that volatility, as Adrian is saying here, is volatility could increase after consolidation zone. So that's indeed another way of looking at it. True. Yep, it definitely could. Silver might break through all of it. I would rather wait for the break personally and a hook back than trading it right here, though, personally. But it is very close to big support. And if you look from a daily perspective, it's actually pushing through yesterday's high, but it still has a weekly bearish candle last week. So last week's high, in fact, is something else to still be careful of. It's a pretty tight range, but if it can box its way out of it, it might have some good space. Resistance line like that is also kicking in. So if it's able to break through that, who knows, that could be a pretty good rebound depending on circumstances. Well, folks, thanks so much for joining us today. I hope you will join us later this evening, in fact, at 6 p.m. Central European Time, or otherwise on one of the 2 webinars we have tomorrow. And in the meantime, also good trading throughout the day, and have a great day. Cheers.